Today, our day 3rd, November 23rd, 2025, and our topic is the computation of corporate tax. The idea to take care, start with the corporate tax pattern to understand all the applicable element or the applicable line item of the corporate tax return, to understand what is the importance of the learning that we're gonna do with this workshop or this corporate tax training. Because first, where this topic is relevant in the pattern of return, and then in the moving forward, maybe this session or the maximum next session, this foundation level or overall framework of the corporate tax will be covered. Then on each topic, we will start diving into and understand in each topic. But when we're starting in detail, then you might understand and correlate in better way why we are learning this, why is it important, what are the expect to be covered, and where it is getting linked. So this is the objective why we started from the definition of corporate tax, that in the past two sessions, we understand the definition of corporate tax. What is the definition of corporate tax? Who will pay, when they will pay, on what they will pay, at what rate they will pay. These are the 4 or maybe the 5 points, the basic fundamental of the taxation. So if we are focusing on that, tax is applicable on what? On taxable income. So now the taxable income, what is the taxable income? We will understand on that. So the taxable income, how it will be calculated. So today we are going to dive into on foundation level computation of corporate tax, or if we say here the computation of the taxable income. In other way, computation of corporate tax, taxable income. Of course, when we doing the computation of corporate tax, the first part will be taxable income. This is the first part. So we are focusing on the first part, taxable income. The computation of corporate tax, other aspect also is coming. That is the umbrella, but this is the first part, taxable income, that we're gonna learn today and that we're gonna understand today. What is the importance, that also we're gonna see that. So here the disclaimer regarding the training. Here we mentioning on each online event. This is the free educational event, and in case anyone require one specific discussion, that may be discussed outside the training, but in case any participant wish to discuss and hiding the confidential information or discuss or understand for knowledge purpose, yes, this is the platform that we're going to discuss any case, any perspective, but relevant to the same topic. Why? Because if we start discussing the randomly, it would be difficult to cover the text in a 20 session. So on each topic, if you want to discuss the relevant part, you can discuss the previous session, and mostly because the previous session, what we learned, what we discussed, we can discuss that part also. Okay, here the computation of corporate tax. Let's understand computation of corporate tax, how and from where it will be start. So in this regard, mostly we are familiar how it will be start, but still, I wish we can have some little bit understanding before moving forward. If anyone want to share his point of view, share his understanding, most welcome. Normally, being a accounting or being a in the organization, what are the common function is running in term of the finance or the accounts department. Mostly the accounts and finance, the word is commonly used. So I'll start with that. Accounting department I'm using, maybe some participant have different argument on that. So that maybe is correct also. But here for general understanding, so let's focus on the accounting department. So what the accounting department do in this regard? Each here again, I'm gonna refer here the each business, or each entity, the first uh, ac- the first resource or the first department is starting with the organization called the accounts. And even the UE commercial law. What is the commercial law? Commercial company law, we can say UE company law uh, require the accounting to be kept for record purpose. One is the business or the management. They of course looking for if I'm doing the business, so how much I'm earning on that, and what are the expenses? What are the possible cases where I'm in profit and losses? Are to control the expenses? Are to focus on the area where the maybe the cost is unnecessarily is uh, and unnecessarily they are investing more on that area. So many objectives. So we are not going to dive into accounting perspective, but this is what the currently the each organization is standing. Each organization is standing over here. So they have the accounting department who's making the accounts. And now another point over here. Let's because here we are understanding and summarizing and moving forward to the written part. How they will maintain their accounting. How they will maintain accounting record. Maybe some applicants saying we're starting from very beginning, but it's important to have the better understanding, um, not for all, but most of them, how to maintain accounting. So normally they are using the ERP. So ERP, each entity, they have their own preference. So let's take the example in terms of the ERP, maybe they are using the Odoo, they are using the uh, Zoho, they are SAP, any other like some they are using Tally, some they are using the uh, QuickBook. Here the term ERP and the application is another. I'll write the application. There is a difference in ERP and application. So if we call the QuickBook, Zoho, they are application. Tally, they are the application. And there is a zero, they call this is part of the application. They are ready-made uh, without any further implementation and configuration. Versus the ERP, the enterprise resource planning, they have very detailed implementation, configuration of each module as per the entity. So now the point is here, so why I'm starting from here. The discussion or the importance of the each ERP is also there. So let's take the ERP part. An ERP, while doing the configuration or implementation, so they have separate module for each activity inside the accounting. Uh, Now the tax is a separate module. So here we need to focus the tax module configuration is in place or no? Or did we buy the tax module also or no? This is another because many ERP they have the limited option and they give you the text module, or some of the ERP they give you the all application or the all module, but depends the configuration. Now the how the configuration. So mostly the your ERP partner or ERP technical person or the consultant, please discuss with them if this module configure properly. If it's not configured properly, you have to make the due diligence internally, discuss with them why is important, because the data, if from the beginning is configured and the data entered in the system appropriately, so your tax return, your corporate tax return preparation in process from day one. If we ask what is the corporate tax, so this is what we are discussing from day one. As a internal accounting team or internal tax manager, tax accountant or accounting, this configuration must be there. That will help you while making the data entry, or the team that you are working with, you train them your accuracy. Why we are doing to ensure the accuracy of the tax compliances. Ensure the accuracy of tax compliances. This is the objective, ensure the accuracy. If we may done mistake due to the limitation, what is the limitation? The text module configuration is not there. At the year end, whatever the effort, whatever the energy as a in-house or with the tax consultant we make, this will be the remain on question mark. Why? Because the data on transaction level is not monitored. If data on transaction level is not monitored, the chances of error will remain there. Tax return anybody can file, but the objective is to file correct tax return with accuracy with the applicable regulation compliances at transaction level. The word I'm mentioning, the transaction level, is a very important, because the UE commercial law is focusing on the companies to make the record keeping. Okay, record keeping for 5 years. VAT also the 5 years, and the city is for 7 years. So let's assume the 7 year record must be kept. And if the kept, so how you will make the record from the transaction level? This is the your accuracy, the entity accuracy or entity compliance with the legislation. This is the important. If from the beginning data is not maintained appropriate way, and the year end you start looking for the consultant, and then he cannot help you. Of course, he will come up and say, the another, why I'm sharing this reality, this is also important to understand in terms of making the return. What is the starting point that we gonna start today? Okay, the here let's assume here the accounting team and making the data at transaction level. Here the I'm saying the tax consultant year end. What is the starting point? Audited financial statement. The tax consultant will start his work from the audited financial statement. Here, maybe some people have the different argument that maybe is correct or not correct. That is not the main dispute. But as a concept, as a concept we have to understand, because mostly the people saying, okay, we need to file the tax return, so tax consultant is requiring the audited financial statement. So when you get the audited financial statement, what is the objective here? If your transaction level audit, here is the auditor. If auditor already classify the transaction, if auditor already classify the transaction like the rent, like the entertainment, like the employee salaries and wages, many, and here is the revenue. If auditor already verified and issue the audit report on all these items, so tax consultant will start work from there. If tax consultant start work from there, so he will not go back and check whether this revenue is correct, this rent calculation is correct, this entertainment expense is belongs to employees or belongs to the owner or belongs to the customer or belongs to the vendor. And this salaries is having the element of the owner and the employees. Why? Because if auditor did not disclose this breakup, these figures, so his reliance started from here. And when people saying, okay, no, tax consultant filed the wrong return, even having the all the competence, still he's doing the mistake. If your scope is started from here, your scope is starting from here, so how you can expect the accuracy at this level? Because you given the scope for the tax return computation, and he will take the audited figure, he will not dive into and verify what kind of this revenue, from which revenue from which revenue stream is coming, and this rent for your entity for whom we are filing the tax return, or this is the group, or this is the group rent element also there, or here maybe the owner rent, owner house rent is also there, or maybe the employee rent is also there. Okay, how many further details are here? Normally this is not the case, and people do not understand this part, and at the end they are agreeing the scope for this, and at the end the objective of the accuracy is not fulfilled. So why I'm highlighting here, the importance of accounting team at transaction level is very crucial. If the tax module or the tax configuration at the accounting system or the ERP system that you're using is active or it configured properly, so then the accuracy is going up. Not only the accuracy, the compliance is also required for 7 years. So this is one of the basic difference I want to highlight, because here's the scenario is I'm facing the challenge when we ask them, they think, okay, no, you have the audit report, prepare with this, and many people they do understand professionally. So they come up here. They said, yes, we know our team knows our ERP is configured properly. Our reliance is higher on this stage also. And some they're saying, no, we can uh, take the scope this one also for the review, for review. And here the big corporate MNCs, then normally they have in-house tax manager or tax department. The big here another point, corporate culture. The corporate culture, the multinational organization, they have tax department separately. Accounting department is already there. Tax department is separately, they have it. Then they have tax consultant separately. How they have tax consultant? Not at year end. They have retainership. What is the retainership and the difference in the scope of the return filing? They agreed on the transaction level review. Okay. In case any different or the new transaction are appearing, so their accounting team refer to the tax department. Tax department they make their internal due diligence and they come up consultation with the tax consultant also to ensure the accuracy. Why? Then it will go to the ERP team wherever possible to configure that transaction also over there. Anyhow, I believe the basic differences we do understand on that. So now here we're gonna start with the competition taxable income. Here the important part, taxable income adjustment. From where? From the accounting profit. Accounting profit before tax that given by accounting team. Accounting, our in-house team, our audited financial statement. This will be our starting point. If this is our starting point for today learning. So hope we understand how the accounting profit is coming. And now from accounting profit, how we gonna move forward towards the taxable income. Towards taxable income. As per article corporate tax article 20, there is a eight adjusting item that we have to adjust in the accounting profit to reach the taxable income. Eight adjustment in accounting profit. This is our starting point. So let's see what is our today first adjustment. Here, I'm just gonna share quickly the eight adjustment. Then we're gonna dive add back non-deductible expenses. Add back non-deductible expenses. What does mean? Some expenses accounting team already less from the accounting profit. From the accounting profit, they already minus deducted. So here we are saying add back because this is non-deductible. This is not allowed as per the Article 33 of the city law. Many participants are mentioning, give the reference, this is the city law. So if you, Article 33 of the city law, search over there, reach over there, and you can see the further detail over there. Now they're saying, okay, we are not discussing the complete article. Here the main are the core are the key points from that article we extracted. So further the reading and the understanding of that article, of course, when you do the self-study, you will have the understanding here. The overall concept of that element you already have. Now the reading will enhance your understanding. Anyhow. Then the exempt income. Okay. Adjustment both dividend gain and local and international. Which one is dealing? Article 22 is dealing of the city law. Realized and unrealized gain. This is the one of the election. This is one of the election, but again, we will understand here the difference will be there. Income arising from the intra-group transfer. If any income arising from intra-group, so that also we're gonna understand on that. One, two, three, four. Transfer with related party and the connected person. Related party and connected person. This is also important. And the in the corporate tax return is have the further requirement how it will be fulfilled. Transfer of losses within the Article 39. Of course, we will understand one of the participants mentioned for the loss transfer. Of course, this we will understand in Article 39. What are the criteria, how we can transfer and adjust. Incentive and tax relief. What are the incentive and tax relief? That also we're going to adjust in the while doing the computation. Then any other adjustment by the minister. So this is our 8 point. So far, any point or any comment or any question that you guys have it, please. Any question? Okay, let's move forward. This is the our agenda. Same what we discussed. Taxable income, starting point. This is agenda starting point. Article 20 of the city law adjustment. So from here we're gonna start. Non-deductible expenses, Article 33. And we'll continue, move forward one by one. And here is another important point. Link with FTA city reconciliation. What the point is here, the same time we gonna see in the FTA corporate tax return where this point is gonna added or impacting or why we need to understand and learn this part. Accounting profit before tax. The second last, again, the second last item in the income statement. What this mean, the second last? Anybody want to clarify? If this is the second last, then what is the last point? What is the last point? This means the last point is the other comprehensive income. This is before other comprehensive income, accounting profit before tax. PPT, mostly we are familiar, PPT. City on taxable income calculation adjustment. So profit before tax, second last item that we just now understand. Starting point from taxable income computation. We will take the profit from the audited financial statement, or from the accounting in-house financial statement, or from the system generated financial statement. But as we are submitting the return and FTAs relying on the audited financial statement, so this is our starting point would be. Many people will ask, okay, less than 50 million, the mainland companies, audit is not mandatory, then how they will start? Okay, fine. But how about the commercial law? Companies, the commercial law, where you are standing? They are saying you have to do the audit. You make the memorandum Aqd Tasis based on that company is established, in which is mentioned you have to do the audit. You have to close the books within 90 days. You have to call the AGM. You have to, in case you are declaring the dividend or any element, pass the board resolution based on the AGM document. And mostly in UAE, the companies previously is not following, but now the importance is on higher side. They knows in case of any tax dispute with FTA, so this audited financial statement would be required. If it require and we cannot produce, so the we will get the fines and penalty over here also based on the commercial law. And recently, one of the legal matter that we are part of that, so we are discussing. So the court is given the fine. The management is they kept the audit, let's say up to 2016. The company is since 1990, so they have the record up to this. But from here till 2023, the record is not there. This was the dispute between the management, between the shareholders. So the person or the management who have the control, maybe they did not did or they did not produce to the courts, maybe due to internal reason. So court put the fine on this, maybe the more than 20 million because this company, the dispute was much higher because the revenue is more than 1 billion. So just imagine the dispute between the management. Anyhow, this is one of the importance I'm highlighting for the UE commercial law because the company itself, the document itself is saying based on that you are running the whole business, you have to do. But we are not familiar. Many other compliances as per commercial law is required. Anyhow, so we gonna start over here. The starting point for taxable income, and we will make the 8 adjustment. This is the same thing now. Yeah, in case